Hello, welcome to the weekly technical analysis review. It's Tuesday, May 2nd. I'm Selena Nicholas, technical analyst at xm.com. So we'll look at some major pairs on the daily chart as well as gold. So we'll start with EURUSD. We could see that it remains in a consolidation phase, pivoting around the key 1.09 level. Near term is neutral, but last week's surge above the 200-day moving average has given the pair a more bullish bias. RSI is also above 50 in bullish territory, and so is MACD in bullish territory above 0. And if we look here, the gap from last Monday, hasn't been filled yet. But EURUSD needs to break above its 5.5-month high from last week, the 1.0950 level, in order to strengthen the bullish bias, or else the pair is vulnerable to a correction lower and falling below its 200-day moving average, which is currently an important support area. Falling below this would change the outlook. If we look at the pound dollar, as long as pound for now is consolidating around 1.29, and the outlook is seen as bullish after the April 18th surge higher. We saw another leg higher this last week, and right now we're just consolidating around 1.29 and key resistance at 1.30. So we have support at 1.28. Short term remains bullish. We could see this market structure, and being above the 200-day moving average is giving a bullish bias, but there are diminished odds for further extension to 1.30. Based on RSI, it's currently flat, just around the overbought levels. So we might just see some consolidation in the near term. Now looking at dollar yen, it's looking bullish in the short term. Upward momentum is quite strong, especially after breaking above 50. RSI is now in bullish territory, and it hasn't reached overbought levels yet. It's not close to 70, still below it. But USDJPY has to break clearly above the Ichimoku cloud in order to improve the odds for further rise into 113. So the bottom of the Ichimoku cloud is now acting as a barrier for upside moves. Now let's take a look at AUDUSD, Aussie dollar. There was a rapid turnaround last week for the pair. It had reached a low of 0.7440. It was looking quite bearish last week, but then we saw a bounce higher back above the key level of 0.75. But the pair found strong resistance at its 200-day moving average, just around 0.7550. So now this is acting as a barrier to any upside moves, but a clear break of this level could see a move higher towards 0.76, and we'd need to see a sustained move higher in order to come out of this recent range, sideways trading, and to target 0.77. But for now, we have immediate support at 0.75, and below this we'd target 0.74. But the immediate out bias is neutral around this 200-day moving average. Now let's take a look at gold. We're on the daily chart, and we can see that gold is moving further away from a 5.5-month high that was reached earlier in April, just below the 1300 level. It wasn't able to rise above this very key level. And now the 200-day moving average is acting as support, but prices are currently testing this this support area, and falling below it could change the outlook for gold. It was looking quite bullish. We saw quite a rise from mid-December, 1122 level, and then rose all the way up to come close to 1300. But we're seeing a pullback now, and unless prices, if they can stay above the 200-day, the bullish outlook will remain, but otherwise falling below this 200-day would target 1194. This is quite an important level because if prices fall below this March 10 low, it was March 10 low, we could say that gold will become more bearish. It would have retraced more than half of the up leg that took place from December to April. So that's it for today. Thanks so much for watching and have a great day.